we've got, we've got his second day testimony. It's a wee bit earlier today. It's in about an hour's time. We've got the key unemployment data for the week today. We've got US claims in about 10 minutes. But earlier today, we had the jobs numbers out of the US labour market. It was biased to the upside. It's relatively positive. Claims were down nearly 115,000. Employment was up 350,000. And some regions are now in the UK are back over their employment levels where they were before the pandemic back in February 2020. So on the jobs front, that was a relatively positive number out of the UK. We've also had yesterday, we had Andrew Bailey, the head of the Bank of England, again talking about that inflation is just transitory, joining this continuing mantra out of the central banks. But two other members of the MPC, Ramsden and the key hawk, Mr. Saunders, have been talking. Talking tightening as well. So the 5th of August is the next key day for sterling traders. So let's just have a quick look at sterling before we get to the US numbers. This is let me just bring that up. Actually, bring that down. Let's move me down. There we go. Where's it gone? Where's my chart gone? There it is. Actually, where have I gone? I've disappeared now. Get rid of me and the chart. There we go. Right, so this is sterling on an hourly basis. We were up to test 139 earlier on the break of this gossip about possible tightening from Saunders and Ramsden as well overnight. August 5th, it's key day as we move forward, but really we're channel bound between 139 here at the top and 138 at the bottom. So a big 100 pip range has been persistent for a while now on sterling. So see where the central banks fall out on that. Let's go back to the euro. Actually, go back to the dollar index. We're at 92.50. We're up relatively strong. We are waiting the weekly claims number. Remember, last week we missed by about 30,000 again. Previous week, 2 weeks ago, we'd hit a new post-pandemic low around 345,000, I think it was, for the week. But the continuing claims numbers continue to excuse the pun, continue to move to the upside. So the 4-week trend has ticked up as well. So this week it's around 350,000 new claims. Remember, in normal economic cycles before the pandemic hit, the normal sort of relatively healthy new claims in America is around about 200,000, 250,000. So we're still 100,000 above that key level. So things are moving in. Carlos is asking about the Dixie. The dollar index here. This is the where am I? This is a 1 hour trade basis. Let me just put the separate period separate on here. There we are. So we've been down a bit today to the 200-hour moving average here at 20.35, but it's relatively strong. It's moved up quite significantly above the high of the Asian session this afternoon and moving high at 92.50. Yesterday's peak took us to 92.85 again, which is for the week. That's the top end there, Carlos. So trending higher. Dollar relatively well bid. If we look at the daily time, you see it's relatively well bid. There's a 200-day moving average down there at under 92 now, 91.90. The 20 period there, the midpoint of that Bollinger Band there is above there at 92.17. And this 9 period EMA has been our support from the break over the 20-day moving average here at the beginning of June. So dollar remains relatively well bid. We want to, we've tested this 92.81 area here, as you can see. What's that? That's 1, 2, 3, 4, 5 times now in June. So we need to break over that if the dollar's going to continue to accrue. We'll see what the noise is out of Mr. Powell again today. Today is the statement got really interestingly. If we look at yesterday's intraday, the statement got released 3 hours earlier yesterday, and it sort of shocked the market a wee bit. This is at 3 o'clock candle yesterday when the news came out. So he's more dovish than expected. This big move down yesterday is the dollar index as the news came out, and then as he was chatting on, it sort of petered down and inevitably sort of tested that 200-hour moving average there at 92.30. Ticked up a wee bit in the Asian session, then drifted again this morning. So the lows really over the last couple of days have got lower. So you could say we're still in a bit of a downtrend, but that seems to have turned around in the last hour or so. So see if that continues to the upside. So 92.50, key resistance, big psychological level, and then a big leg to 92.82 for the Dixie, Carlos, my friend. Who's next? Dr. Sands just saying, good evening. Good evening, my friend. Hope you're well, staying safe. Natalie's asking, is it Natalie? No, it's Helen's asking, which direction for gold? Well, it all depends on your time frame, Helena. If we look at the daily time, well, actually, let's go to the daily time frame. The daily time frame remains relatively big, doesn't it? So it had a really strong day yesterday, big breakout again on the dovishness coming out of Mr. Powell in particular. So we moved up. We've got a weakening yield as well. US 10-year Treasury yields moved down to 1.31% again today. Remember, we can't. The key support level is at 1.60. So we're still way below that key support level. So drifting quite significantly on the yields. But the gold has had a strong June. It was just waiting to break out. It was testing that 1805 area here. See, that's another test of 1, 2, 3, 4, 5, 6 days, testing that 1805 area and the 200-day moving average. Finally broke through that yesterday very strongly, and we closed up here at 1827. We was high as 1830, I think, earlier today as well. Now we are 1832. On this particular chart, can you see that? We're now testing the key 50 Fibonacci level, the retracement level from this big move down that we had from June. So at the beginning of June, we were all the way up there at 1920. We went all the way down to 1750 at the end of June, and now we've retraced 50% of that decline. So we're bashing into that at 1832. So the next level, as we broke 1805, is 1832. Well, we did it all in one day, which seems a bit excessive. So you would expect a wee bit of a retrace. But now the key 1805, 1800, that $5 zone now becomes our support, whereas previously for 5-6 days it was a resistance. So let's see what happens on that. As far as intraday is concerned, Helen, if you're interested in shorter time frames, the daily's bid, so we go down, let's step down our time frame. So the 4-hour remains very big, doesn't it? That's that big move up yesterday that Mr. Powell's statement was released as we broke over 1805. In fact, over 1815 there, wasn't it, on the 4 hours? So again, you see 4 hours rallied, banged into that 50 Fibonacci level at 1832 and then come back down. The 1 hour might be a bit weaker. Indeed, it is. It's showing that sort of exaggerated bash into that key level. So we've moved down. That would have triggered low, really. So a big, strong candle earlier on the 1 hour time frame to the downside here in the last couple of hours, but it's bounced off that. So I don't know what that 1821.69, that looks like a support from resistance area, but that's support today. We've bounced off that, and it's maybe moving up. As far as 1 hour trades are concerned, that would have triggered short a couple of hours ago. It's gone against you in the last 2 hours, but not much. It needs to, if that move down is going to be retraced and we're going to move back up to 1832, we need to at least break 50% of that down candle. So that still looks relatively weak on the 1 hour basis. We go down to like the 5-minute traders. We've had a nice move down there into that floor. So 5-minute here on the gold today has support at 1823.47, and now in the last 10 minutes, as I've started talking, it's just ticked a bit higher and has support at 1825 as well on the 5-minute chart. So Helen, I don't know what time frame you're trading, but just to recap, gold remains positive on the daily, relatively positive on the 4 hour, needs to break 1832 on both those charts, and the 1 hour rolled over in the last couple of hours. And it needs to break under 1822 really if it's going to move any lower, but to move higher it needs to break that 1832 level. So 1832 key for gold traders. Who's next? Bathurst asked about the DAX, the JER 30. Let me just check the data before I do that for you, my friend. So the key data, 12:30 GMT, the US data dump for today is just coming across the wires, as they say on the telly. I haven't got a TV here. I've got a relatively slow internet connection, actually, to be honest. And we've got, right, let's just run through them all. We've got quite a significant miss for the Philly Fed Manufacturing Index. And I can't see the Empire State. Why isn't the Empire State on here? The Empire State has, that one hasn't updated either. Yeah, let's have a quick look. So Philly Fed missed. Empire State probably hasn't come through yet. That's why. Empire State is a big beat. So Empire State is the manufacturing in the state of New York. It's coming at 43, a massive doubling of last month. So big ramp up for New York State. And a big miss for Philadelphia. Well, not big miss, but quite a significant miss at 21.9. Don't read too much into these two key manufacturing numbers because they can be quite volatile. For instance, Philly Fed last month was 30. We've come in at 21. It was 28 expected. So it's quite a significant slip. And Empire State is a big boost. There must be something within New York that's helped that quite significantly. There's obviously been a lot of voting. That's a big number for the Empire State at 43. Key number really that we focus on, I've been focused on for the year and a half, is all about jobs, all about employment, all about unemployment. And yet again, the weekly initial claims has missed. We're coming at 360,000. It was expected around 350,000. So the headline weekly initial claims has missed again, 360,000. And let me just check the ongoing. So the where am I? Why isn't it showing me? It's got. It hasn't got. Yeah, the weekly average has actually come down a wee bit, 382,000. I can't see the continuing claims number here for some reason. Let me just see if I can refresh this chart. Hang on a second. Let me just recheck the continuing claims. See if it's under that 3 million number. Let's have a look. It's not showing me for some reason. Never mind. Yes, 3.24 million. So that's actually better than expected. So the weekly initial claims is worse than expected at 360,000. Not much, but and the continuing claims has improved quite significantly, 3.24 million. So and the weekly average has come down as well. So although we've been missing in the last few weeks on the initial claims, the miss is getting smaller. So we're only 10,000 out of expectations this week. So that's a relatively good number, although the headline missed for the claims. Empire State is very interesting at 43. So I need to investigate that a bit further. And ADP out of Canada, I can't see what that is yet at the moment, but relatively good data there out of the US. I said earlier we had good employment numbers from the UK, as I mentioned earlier. Inflation continues to be the topic of the central banks and others. Where have you gone? I've lost you all. There you are. DAX asked Bathos after the data. Let's have a look at the DAX. And it's, I checked all these charts earlier, and did I have the DAX? I didn't have the DAX. I'm going to have to open yet another DAX chart. Can I just get to it without? No, it's okay. Don't worry. So let's have a look. So German DAX has really been going sideways. The what's it on here? Index. Oh, that'll be on here. Or is it going to work? German daily. There we are. So this is the daily. Is that up to date? Yeah, that's up to date. Okay, so this is the DAX generally grinding high, but you can see we haven't burst higher like the US market. So we've got this key resistance running through here around 15,800, which we can't get over. Although we have pushed to new all-time highs as all the equity markets are globally. But it's really, for me, that's really sort of, well, not just for me, but really, you can see that that's relatively channel bound. So we got support around the 20-day moving average here at 15,600. We obviously been lower than that here in June, and we've been as low as 15,400. So a clear 400-point gap on the DAX. Sounds a lot, but the DAX is a really good one to trade. and it moves around a lot as well, certainly on an intraday basis. So Bathurst, I don't know how you're trading this, but for me, the daily is consolidating because we haven't broken away from this 20-day moving average. See how we haven't broken out of that channel, or we can't get away from the 20-day moving average. We're just sort of oscillating around it from this 15,400 to 15,800. So intraday, that looks quite weak relatively. The daily candle today is down. The 1 hour chart is not refreshing for some reason, and it might be because it doesn't want to. No, it doesn't want to. Never mind. But anyway, so that's the DAX. We'll come on to another chart if you want to look at it in Bathurst. Let me know if you want to look at it intraday. And for some reason, this particular chart isn't updating, but we'll look at it later if you want to have a look at it again. Where was I? I was on default. Wasn't I? I was on default. Oh dear. Some reason everything's on the 6. So that was gold we had last had a look at. Adrian's asking about the yen. Let me just check my friends over on Facebook, see what they've. If there's any comments there. I'll start hearing myself. Right. No. Good afternoon. Tonso. Good afternoon. Ibrahim. Good afternoon. Ibrahim. Actually, what, my friend? Anything you want to look at, Facebookers? Let me know. I can't see your immediate questions here, but I see our YouTubers. So Adrian's asked about the dollar yen. Dollar yen remains obviously a key currency of interest. This is the intraday 1 hour time frame. If you look at the daily time frame, this is the 1010 area. We've been as high as 111.56. So again, let me just put on let me a bit of period separate. So perspective. So here, April, May, we were higher. June went higher, and then here in July, we've slipped from this 111.50 area. Is that the day? Yes, the daily time frame. So this is our July number. So under one, from 111.50 all the way down to 110 and under, and we've got as low as 109.60, wasn't it? 109, yeah, 109.50 was tested. So relatively weak. We're under that 20-day moving average still, and we have been for 1, 2, 3, 4, 5, 6 days now. So we need to break above that key level for me at the midpoint of the Bollinger Band there at that 110.50 zone on an end of day basis. We were testing it earlier in the week. Yesterday we shook out quite significantly again, all driven by Powell's testimony, and now we're under 110 itself at the moment. So intraday, that moved down yesterday. It's moved down. It's triggered a bit longer here. Again, in the last couple of hours, the dollar's seen a bit of a bid as we've run into 109.78. So that's gone long, and it's ticked up from there, interestingly. So MACD remains under the zero line, but the signal line is flattened out from the decline yesterday into this morning, into the afternoon session here in Europe, and it's starting to move up. Stochastics there is looking into the oversold area, but that's not too much of a worry. And RSI is raising its head out of the neutral zone at 54, so that looks like that moves up. Next resistance, immediate resistance intraday today is that midpoint, the Bollinger Band, which now sits at 110.15, and then the 200 hour, which sits at 110.33. Dollar yen, Adrian. Aussie. I knew someone was going to ask Aussie. I was checking through all the majors on this workstation custom, and I didn't have the Aussie. I thought, I'll do it, and then I never did it, and so I'll have to open a new chart. Let's have a look. So let's have a look what we want. We want the Australian dollar against the US dollar. Let's put our template on. Which one are we using? We're using this intraday crossing one, and where are we? Just move that forward. What's happened here? The daily. There we are. Move that back. Let's see. So what's happened? We've had a decline. June weakness, July weakness, and we've been under 75. Let's put this on. This new chart. Let's put 75 on here. Or dot 75 is where we are. This is 74.91. So let me just do this. So we've got relatively stronger, significantly stronger dollar against what had been a strong Antipodean pairs. Story is they may come back. Obviously, the issue in the last couple of weeks in Australia is their lack of vaccination as far as the virus is concerned, but also over half of the population was in lockdown for well over 2 weeks. They've extended the lockdown, they've reduced the number of people in Sydney, but this morning or yesterday, wherever you are in the world, they're talking about yet another lockdown in Victoria and Melbourne. So the two main cities in Australia are back into lockdown, and that's constricting obviously economic performance going forward. Obviously, as we said, the jobs number from Australia overnight was very, very strong as well. So not only US, UK, but Aussie jobs were good as well. As far as the Australian dollar is concerned, that daily time frame remains weak. The 20-day sits there at around about that 75 level. And again, another one that's sort of just waiting for some sort of direction. You can see the last 3 days we haven't gone much lower, but our low recently has been under 74.25 or 74.20. So that 80 pip range there between 75 itself and 74.20 is where we trade this week. Let me just put the time separators on this as well. So there we go. So what's this? This is the daily. So that's our daily range here, really for July. Intraday, again, another one that's ticked down. The lows were getting lower, the highs were getting lower. We've trended lower yesterday and today, and now another one that's sort of turning around as the Americans wake up to start their trading day, and that would have triggered a long here, breaking both the 200 and the 20-hour moving average in the last hour there at 77.45, and another, that down trend line it's tested at the moment, isn't it, from yesterday's? So through there, we're sort of, it depends how you draw your lines and where you connect them. One of the worst drawers of trend lines, but we're right on it. We're over it at the moment. So we've broken that. We've broken that 20-hour moving average on those 1 hour chart. So it's moving up 77.55. Next support, or next resistance, I should say, is 77.70 itself, custom. To the downside, we've clearly got a support today that didn't want to go below 77.30 here. This close of those candles there. Custom, my friend. Lennox, what direction were euro in the 5? Well, Lennox, you probably asked this question about 20 minutes ago, so it's probably all changed. But euro dollar in the 5-minute chart, let's have a look. Let's have a look at the 5 minutes. Well, the hour is down, okay? So any long trades you take on the 5-minute, you're against a much higher time frame. The 30-minute is down. Looks like it may be turned around the 30-minute. The 15-minute is down, but it's turned around by looks of things. It's still way under things. So Lennox, my friend, I'm going to say it's down, or it should be down in the 5-minute, but let's have a look. Look at that. It's been down. You've been short. Hopefully, if you've been trading this on the 5-minute time frame, Lennox, hopefully you've been short from about 12:40 server time, and you've managed to bag quite a lot of pips, because that's just rallied down, and you would have got out. Again, if you were with me yesterday in the webinar when we were talking about scalping and trading these shorter time frames, you would have got in there and got out there. So you'd have got in all the way up here at whatever that is, at 118.43, and you would have got out as we've broken over the 9-period EMA using this strategy there at 118.11. So a massive 30 odd pips, 34 pips, 35 pips on the 5-minute time frame, trending the euro dollar. Nice one. Well done, customer. Lennox, I hope you bagged some of those pips. At the moment, it's trying to go long, but it hasn't confirmed. But I suppose you could argue it confirmed here, just as I started talking here. But it hasn't. It's not clear. Why do I say it's not clear? Let's zoom up. Let me explain. The 5 and the 9 haven't crossed. They're playing with each other. They're sort of dodging around. So we need a clear break. We need the 5 and the 9 to cross clearly, and then we need to break over the 20. So a very weak entry could have happened at 15:40 in the last 5 minutes, but then it's retraced it in the current 5-minute time frame. So that doesn't look like it wants to go up. So we've had a nice lots of pips. Why sort of give any of your gains that you've had this afternoon on the euro dollar. Back, I would, if I was trading this on the 5-minute chart, that's a huge move. I'd have been, 35 pips on euro dollar on a Thursday afternoon. That's great. Thanks very much. I'd close for the day. Enough pips. I mean, if you did 30 pips every single day, just think about it. If you made 30 pips, ladies and gentlemen, each trading day, that's a very, very good haul. Pros don't do that sort of move. But yeah, nice move. I'd have quit for the day, to be honest. But it's trying to go higher. Can't confirm it, so I'd stay out at the moment, Lennox. I don't know what strategy you're using, but my trend-following strategy is saying nothing's happening at the moment. Good morning. I have a question about hot forex commissions compared to other brokers. Are the commissions high or low? They're the best, Martin. We're the best broker. You would expect me to say that, wouldn't you? Martin, I don't know, to be honest. We're as competitive as the next guy. The thing about choosing a broker, Martin, is it's the whole package. It's not just, the spreads. It's not just the commissions. It's, how long have they been in business? How reliable are they? Where are they regulated? Do you trust the people you're dealing with? A lot of this is obviously done over the phone. You don't see us. I could be anywhere, really. I mean, so you've got to understand and trust the people you're dealing with, trust their banking systems, look at their credit history, look at what they've been doing, how long have they been in business, all that sort of thing. So yes, our commissions are very competitive, they're as good as anybody else's. We do lots of free stuff. You don't get me anywhere else either. So love me or hate me, that's up to you. But yeah, Martin, I hope you can stay with us, my friend. We've got a really good partnership an affiliate program, Martin, as well. So have a look at that. Prediction. I hate the word prediction, Rudy. Don't get into trying to second guess what's going on. Again, you would have. Some people that were trading this morning would have been, or this afternoon even, and this is a 5-minute on the euro dollar. Have you the patience? Ask yourself this, guys. Have you the patience to stay in that trend all that time? You're a 5-minute trader. That's how many candles is that before you go out? That's a huge 32 candles. That's a massive, massive trend. Imagine if that was the daily time frame. Obviously, the pitch you'd made would have been huge, but it's over a month's trading, 30 trading days. That's nearly a month and a half of trending that lower. And that's what happens. That's how many traders trade. Regardless of the time frame, have you the patience? Would you have stayed in that all that way down and not got out? Here it's tested the level you were going to get out. Even if you were trailing your stop loss down it, you'd still stayed in it. But that's what trend following is all about. You've got to be able to follow it and trust when it runs, it can run. And what we're seeing now is a classic sort of, we've had a really nice long run down, 32 candles. Thanks very much. Lots of pips bagged. And now we've gone 1, 2, 3, 4, 5 candles. Can't decide what we're doing. Are we going up or are we going down? Nobody can really tell, can we? Remember what we said at the webinar on Tuesday about doji candlesticks? Look at that. We got one there. We got one there. We got one there. So 3 in a row. Indecision. Doji means indecision. So basically going down. Anyway, Rudy, dollar yen is what you're asking about. Dollar yen using the same strategy. This is the 1 hour. That's short. It went long here at 2 o'clock server time, 1400, and it's ticking up. It's trying to get over 110. Big round psychological number. Can't break over there at the moment. But at that hour is long. The 30-minute went long at the same time. 30-minute chart, and he's been long for 1, 2, 3, 4, 5, 6 candles now. So 6 times 30, that's 3 hours. So 30-minute trader's been in that for 3 hours. He's up 109.93. He's up He's up. He's 5 pips basically, isn't he? He's not up very much, but he's in the money, and it's trending higher. And it's just hang tight, guys. It's moving higher. 15-minute guy probably triggered a bit early. In fact, he triggered exactly the same time as one. That's weird, isn't it? At 1 o'clock. So he's been in for 1, 2, 3, 4, 5, 6, 7, 8, 12 candles because it's 15-minute, and he's still long. And our 5-minute trader, when did he go long? Well, he went long a bit earlier, didn't he? On this dollar yen, he went long back here. He was first to go. Tentative little break there at 12.40, 12.45 was a big break because it's broken that down trend. See these fractal highs here, these little arrowheads. See how they've been trending lower all, well, not all mornings. Yeah, all morning, 9:30 here. And there we go. Here at 12.45 server time, we were over that. That was a nice one. Now we have this huge candle. Thank you very much. here at right on 1 o'clock server time. Remember what we said yesterday on Tuesday about size of candles? Size matters, remember? Look at the size of the body of that candle there that's triggered down the 5-minute chart. So 5-minute, Rudy is also still long, struggling to break over 110, but here we are at 110.5. And again, another one. You know, Rudy, my friend, that's triggered. Another great example. We have some nice trending trades today. So dollar yen traders on the 5-minute chart have been long and remain long. Now, it might even be longer than euro. Yeah, 38 candles. Rudy, my friend, are you still in this trade? Are you long? I hope you're long, because that's the direction the market's going. The 20 periods there, the 9 periods there, and the 5 periods there. Top of the Bollinger Band is our next resistance, 110.079 is what you're looking for. Rudy, where did I get to? Martin. Oh, it's Martin asking about commissions. Team Bezic. Why do I know that name, Bezic? They have good fees. There we go. I didn't see that. Thank you, Mr. Team Bezic. It's answering Martin. Good broker, great support team as well. Team Bezic, can you mention me as well? Great trade, great analyst. Uncle Stuart? No? Oh, okay, fair enough. Martin saying thank you to Team Bezic. I haven't planted these characters, by the way, ladies and gentlemen. Martin's asking for a review now. Martin, can you review dollar CAD? I'm in a short position. What do you think? It doesn't really matter what I think, does it? It's what the market's doing. It's what the market thinks. What the market does. And it doesn't really matter what the market thinks. It's what the chart is telling you. That's the thing. Don't get too hooked up with your expectations or your ego or your this is going up because I said it was going to go up. You know, just because dollar yen's gone up for 38 candles doesn't mean dollar CAD's doing the same thing. But let's have a look at dollar CAD. And again, I must have it down here somewhere, surely, because the Canadian data was a bit. I didn't see it, did I? What was the Canadian data? It came out, the ADP non-farm for Canada. Looks like it's been delayed for some reason. Yeah, it's very negative. It was 100,000 last time. It's coming at negative nearly 300,000. That's a very negative number. So one would expect with that mix of dollar, relatively dollar positive, weak Canadian data, one would expect dollar CAD to have continued to move up. But let's see what the charts are telling us. Just because that's what the news suggests, it doesn't mean that, you know, some insiders have already known that data, or people have already priced in that data, and therefore, you know, what looks like positive data turns out negative data. And I'm trying to find my dollar CAD chart, and it's not there, so I'm going to have to open it up again, a new one. But never mind. That's all okay, because it's quite close here. I don't know. There we go. I just need to put all the templates on it all the time, don't I? Template. Let's use this same one. Let's put on my time delimitator so I can see where I am. Time separators. There we go. So dollar CAD. There we go. Last 3 hours have been really strong. The 1 hour candle choppy around today, but 1 hour traders are long from that candle there. So the trades, the balance is to the upside. We've bounced from this low here at 125.05, so just above the big old psychological 125. We're at 125.48, so we're already 50 pips to the good from the low. We are now literally pushing new highs for the day today. So that's positive. So therefore, the lower time frames will be positive as well. And I've got my Facebook friends here as well. Thabo, we talked about gold earlier. Gold is in the higher time frame, is daily is positive. I'll come back to you, my Facebook friends, in a minute. Let me just finish this for Martin here for dollar CAD. He's short. I don't know what time frame he's short in, Martin, but the hourly looks positive. That's 3 positive candles there, and it's this current candle with 5 minutes still to go is pushing high, so it may roll over at this point at 125.50, big psychological number, but the data was positive for this pair, as we just said. The 30-minute also positive. That 30-minute went long on the 2 o'clock candle. The 15-minute candle went long also at 2 o'clock, and he's been long since then. You can see more clearly the new day high for dollar CAD being posted on that 15-minute time frame. So again, Martin, I don't know what time frame you're trading it, my friend, but There we go. Team Does It says, yes, lack of support and high fees. Who are you talking about? I hope you're not talking about us. Talking about somebody else? I hope you are. I'm sure you are. You must be. Anyway, if not, no. Now we've got great support. We pride ourselves in our support, multi-language support, very, very well qualified support team. They're 24 hours a day, most of the week. So we're here to help, guys. Really are. So dollar CAD remains bid. Who's next? Hi, says Paul. I'm not sure what you're asking about, but Paul, I can't see you. Sorry. Bathurst, yes, Stuart. I sold DAX at 15,710. Will it come back intraday? What happened to my DAX chart? Presumably, did I answer that when we were looking at it before? I shouldn't bend down like that, should I? You see my baldy head if I bend down too much. DAX, I can't find my DAX chart. Where's that gone as well? That's gone. Bathurst 70, 15, 70. It was in that channel, wasn't it? The DAX. Martin, dollar yen daily time frame. So that's let's go back to the dollar yen then. So the CAD's remains bid, and now we are pushing higher. It's breached that 125.50 at the moment, not greatly, but that's a strong there on that 15-minute. CAD for where are we? Dollar CAD, dollar Swiss. I've lost dollar CAD as well now. Oh, what's going on? Buffoon. Oh, because it defaults to the end. It doesn't do it wrong. To get this set up. That was yen. Oh, boy, mad. It was yen, wasn't it? You're asking about, Martin. I'm sorry. Just bear with me a second. Find the right chart. So, right, dollar yen daily. That's the 5-minute. Not interested in the 5-minute. The daily is choppy. We got 110.50 as our top, and our support is 109.50. So we've got 100 pip range, and we're literally bouncing between that from that big sell-off last week. So we can't break over 110.50. We can't go lower than 109.50. So 100 pips. And that's non-ranging. It is negative because we're under the 20-day moving average at the that resistance at 110.50. So it's really negative, but we're having quite a small day today compared to some of the other pairs. But we can't obviously do anything about today because it's not complete. But yesterday we ran to that resistance again and we moved down from it. So if we close lower today than we did yesterday, that's also negative. To take us back over, we need to break 110.50, and we need to have a strong day today. We need to close at least 50% of the candle that we had yesterday, my friend. You're good. They're asking about oil. Not many people ask about oil, but again, oil. I don't know why people don't trade oil more often. It's been a great mover, and continues to fascinate lots and lots of people. Glug, glug, glug. Oil is coming down quite aggressively. Two key things yesterday saw the big cool off in oil. One was the inventories. We're in the middle of the US driving season when peak demand for petroleum, obviously you distill or you crack crude oil to make petroleum. Petroleum, big demand, diesel engines still in the United States. Not the amount of electric cars you might think in the United States. The home of Tesla, but anyway, it's a story for another day. So big demand still for oil and petroleum products. The driving season is driving it. So inventories were a big pull down. But the major thing that pulled the oil market down yesterday was the agreement between Saudi Arabia and the United Arab Emirates. Remember, a week or so ago, we had this big fallout over oil, or what appeared to be over the oil market, but there's bigger geopolitical issues going on between these two very, very close allies with two very relatively young princes that are running these two key countries. So the UAE very much looking for take some business, and the Saudis are looking to get diversify their economy, but more significantly get some of the business that Dubai and Abu Dhabi in the UAE have dominated for the last 20 odd years. So Saudis are sort of playing hardball as well. But anyway, so story for a longer day. The daily chart remains bid. Yeah, and I know we're under the 20-day moving average here today, and we closed under it yesterday. So this is for me, this is probably just a retrace, but we'll see. We'll see where it all ends up. $70 a barrel is the key psychological level and sort of end of day basis to look at. So we might quite easily go down and test $70 a barrel. But we're really consolidated. It looks like it's moved over, but we look like we moved down last week when this first spat broke. They've agreed some sort of quotas. I can't remember the actual numbers. I think UAE are producing about 3.1 million barrels a day. They wanted to take it to 3.8. The Saudis in particular said no. I think they've settled about 3.65. It's nothing's actually agreed or written away yet, but. The other key thing that's driven demand for oil is the expectation that the global economy will continue to expand into the second half of the year and ramp forward. We're seeing quarterly earnings for the second quarter looking quite strong. The 6 key US Wall Street banks have all reported good earnings, although revenues were down, but they're all in now and being digested. So it's where they go from here. They were good, but were they as good as the market was expecting? They beat expectations, but did they, beat them as many were expecting they were going to beat them by? If that makes sense. Exuberance gets ahead of ourselves sometimes. But anyway, oil, $70 is the key support. I don't know what time frame you're trading this, but if you've been long this on a daily basis, quite understandably you'll be bagging some of your profits, and that's sort of what's going on at the moment, I would guess. But the weekly inventories are in now. The Saudi UAE deal seems to be done. So the things that were hanging over the oil market seem to have dissipated. But are we going to cool beyond $70? That's the key thing I would look at for US oil. UK oil, similar sort of story. Brent except a few dollars higher. The chart looks very, very similar. So see where we go with that one. If you're trading it intraday, I would guess you're short because big down day yesterday. This is the 4 hour. It's the 1 hour. So again, that triggered short here yesterday from rejecting that $75. So big old moves. This is 1 hour chart. Yes, it's not yesterday. What I'm right. It's yesterday. I didn't realize we got that high yesterday. So we had got to test $75 yesterday. But that went under its 20-hour moving average here at 5 o'clock. So after the inventories and after Mr. Powell, see how we dived down when the data came out, and then he was chatting on, and now we just continue to ramp down. So that went short there. You'd have closed it out. You could have closed it out there at 72-ish. 71.50, and then gone short again here on the 1 hour. This big down candle, which is big candle, big engulfing pattern again, closing lower than the previous 4, 5, 6 candles. So that's a negative old candle there at 2 o'clock this afternoon. And we've legged down again since there. So we went short there at 71.35, and we currently trade just above $71 a barrel. So you're 35 cents to the good. Yud on an hourly basis. I don't know how you're trading that. Vicky, hello, my friend. How are you? Hope you're staying safe. The NASDAQ, new all-time highs. NASDAQ here, 1 hour chart, daily chart. Let's have a look at the daily chart. New all-time highs, intraday highs, over 15,000. 15,000 for the NASDAQ. There we are. It's not. There we go. Just shy of that, and this is the future. Yeah, that's why it's not 15,000 or 15,000. Huge move. I can't remember the numbers earlier. What's the number? Yeah, the NASDAQ is up 127% from the lows of March last year. 127% move on the technology index. So daily remains bid. Just again, stay with it, ladies and gentlemen. Again, on an end of day basis, we're how many days into that? That's a long, is that more than the 38 candles we had on our 5-minute time frame? That's 38 days as well. So 38 days you've been long. Actually, no, you would have come out there. Actually, that's a bit of an exaggeration. It's not 38 days. It's that one. You got out there and got back in there if you're following the rules of this strategy. So it's not, is it 30 days? It's 29 days. 29 days today, you're long the NASDAQ, 15,000. Huge psychological number. There's fives and there's zeros in there. You know, the human mind likes these numbers. So that remains bid, Vicky. If you're shorting it, you're going very much against the trend. The 4 hour choppy at the top here as we got to 15,000 this week. The 1 hour may be down a bit, yeah, but again, very choppy. Not really directionless, really. Look at that, some big candles there, but and those lows are a bit lower, but that's a bit of a wedge for me on the 1 hour. You could argue on the NASDAQ there from these highs as it's moved down. Yeah, it's not great, but it's some big old candles on the 1 hour. So that's looking at wedgie. Is looking to break out. Depending on how you draw that, you could say that's going to roll over. But currently, for the futures market, in fact, the cash market is 25 minutes away. It's short at the moment, a week short from 2 o'clock. So that's been down, and it really, you want to break this level there. We're under the bottom of the wedge, so that's interesting. But really horizontally, we want to get back to 14,900, really 14,900, below the bottom of the Bollinger Band at the moment, which sits at, what am I talking about? Wasn't at 49, no, I was talking about 14,850. And the Bollinger Band currently sits at 14,865. So that's the next support to the downside for the NASDAQ, Vicky. Gold, we talked about a few times already, but let's have a final look. So gold on the 1 hour has gone short at whatever time that was. 2 o'clock as well. We can't get over that 1832 level. Let's go to the higher time frames. So 1832, a key resistance on the 4 hour and the daily time frame. Why is that? Well, it's the 50%. Excuse me. It's the 50% Fibonacci level of the shakeout we had in June. So the June decline, 50% of it has been retraced so far in July, but we haven't been able to break over that retrace level. So 1832 is a key resistance. The previous one on an end of day basis was 1805, which we broke. So it was a big, strong day yesterday for gold, Vicky, and the next resistance is 1832 to break through on a daily basis. Wahi, I have a question about hot forex. Can I ask? Of course you can, my friend. And where have you gone? Oh, so you wait for me to answer. Wahid, I should say. Wahid, ask away, my friend. I will get an answer to you. Yud saying he's short at the daily time frame. Are you saying that's what you are, Yud, on oil? I can understand that because of the news yesterday and the fact that we broke under the 20-day moving average. So you're just following the rules, obviously. If you, I'm assuming I don't know how you're trading it, but that would have been a very tentative short yesterday because it was still in a very significant up trend. So bagging of profits certainly is what's happened in the last few days. The news yesterday was particularly negative with the oil price, and we followed through a bit today, but $70 remains probably your target to the downside, and for many people will have probably $70 as a target. May overshoot that. I mean, technically the bottom of the Bollinger Band sits at 69.98, so 2 cents below $70. What can I say? That's the 20-day moving average. That's the 200-day exponential moving average, all the way down there at 56.63. I'm not saying I'm going to get anywhere near that, but obviously the 100-day and the 50-day sits somewhere between that. So the next support is probably the 50-day moving average, which probably sits around, I don't know, top man, let's just stick it in. I don't know how you train it, but let's just stick that moving average in. Where is it? 50. There it is. It's going to come up blue. So there it is. That's interesting. It's not just below the bottom of the Bollinger Band. So the 50-day moving average is there at 69.40. So they're your two support levels. If we breach 70, 69.40 is the next support on gold. Wahid, please ask your question. I'll come to you guys on Facebook in a minute. Sorry, excuse me. Good afternoon. Are the pound Kiwi and pound Aussie long sell right? I don't know what that means. Brew L, my friend. Again, the Kiwi and the pound, the Kiwi and the Aussie have been relatively weak today. Sterling's been strongish based on the news data, but that was overwritten by some of the comments out from Governor Bailey and Mr. Broadbent on this idea that inflation is transitory. They're sticking to that bid. Remember, they're the deputy and the vice deputy of the bank. But the hawks on the Bank of England, Ramsden and Saunders, have come out, talking about tightening earlier. So, sterling might get a bid from that, but really nothing's going to happen until the next meeting of the Bank of England on the 5th of August. Pound Kiwi, which I think I saw here before. What's the other one? Pound Aussie. I think I saw them down there. So pound Aussie is the first one I can see here. Actually, pound Kiwi is the first one. Bruel. On an hourly basis, this is hourly? Yeah, hourly basis, that certainly pinged higher quite significantly there. That pinged there at the 1300 hours candle. It's broken. It's sort of over its. In fact, again, technically, it hasn't actually, because that didn't break the 20. The 5 and the 9 were over there. You've gone up there, then you'd been probably stopped out there. Well, again, depending on your trade, what rules you were using to trade this. If you were using the trailing stop rules, you'd have been taken out. If you're using the stop that was down here and you'd left it down there at the bottom of the turn, you would have still been in. So you would have actually gone long pound Kiwi yesterday or this morning, 15th. Yeah, this 15th this morning at 6 o'clock. If you'd left your stop loss down there, you might have moved it. Well, you probably didn't, because that was still. Yeah, you would have still, but you're still in that trade actually, because that retraced, but you hadn't moved up high enough to move your stop loss up. So your stop loss is still the low of the last 4 or 5 candles. It wouldn't have been above this point, so you'd wait for that candle. So again, your stop loss is still there. And then we've had this big leg up here at 2 o'clock over the 200 hour move. Now it's moving up, and we've gone to test. We've gone as high as 198.38. So that bids to the upside. So pound's come back to life, Bruel, there on an hourly basis. It meant a long drop. Yeah, right. Again, Bruel, I don't know what time frame you're talking about, but certainly that we've been moving lower for these two. As you see, it's very volatile. Lots of pips involved with the sterling crosses with the Kiwi and the Aussie. But remember, the spreads will be wider, so be careful. But there are lots of pips on offer for these two. They move, here the hourly ATR for pound Kiwi, for instance, is can you see this? The blue line down there. Let's make that a wee bit bigger, so you can see that. In fact, you can't see that because Bruel. Let me just move Bruel's question. Just hide that. And you can see the ATR, guys, here. You can see the ATR for the 1 hour time frame for pound Kiwi is 37 pips. So it's quite a long way. If we go to the daily ATR, you can see it's a huge 147. So it moves around a lot, lots of volatility. But therefore, the spread is obviously wider. Not to compensate for that, but because there's a big move on it. So Kiwi, big move up. Aussie will be a similar sort of chart. Where's the Aussie pound? So pound Aussie, similar sort of chart. As I'm not surprised. Over 186 now, the Aussie, and it's been as high as 186.40. But another one that's moved up. So Bruel, what did you mean? That I meant a long drop. Yeah, it's had a big move down. It's been moving down yesterday and today. We went to this 185 area, but it's gapped. It's moved up really strongly as well. So depending on how you're trading, depending on what time frame, that's had a strong move. Both of them have had a strong move this morning from the UK data. On the other hand, the Aussie data helped the Aussie move down, but then the UK data came out at 11 o'clock and we've moved up very, very significantly. So we're over 186 for the pound Oz, and the pound Kiwi is over, we got to 198 and we've sort of bounced off it. But again, two similar charts, obviously different trading, but up to the right, daily and weekly you're talking about. Daily and weekly, okay. That needs me talking about the hour. Right, let's do that then. So daily has been a bit choppy, to say the least. This is key. This is the pound against the Kiwi, and again, it's another one that's it's sort of consolidating at highs here. But again, a big Big old move. Let's just put in some lines, see if it clarifies anything or not. Not really. Let's move down. That's broken. It's not really a channel. It's broken out. It's got a flat floor, really, sort of through. It's difficult to say. Now 96, 97 is 197. Yeah, there we go. 197 seems to be the floor, which we're right into or went into yesterday. So that round 197. So we've got a bit of a wedge here. The high has got lower, so we've got this flattish floor at 197. And that you could extend the zone about 20 pips. I would say 196. Actually, it's much more than that one we're talking about. It's 196.80 to 196.30. So there's a 50 pip sort of zone of support there. But remember, this is on the daily time frame. Remember, it moves 150 pips a day. So that 50 pip support, not 50 point support. Let me just put the period separate and see what I'm doing. Right. And that goes back from that high. That high takes us back to the middle of June. So we've drifted lower. That's our support zone here. Let's just insert a rectangle there. So that's support zone there. That's 50.54. It's about there, isn't it? As we go forward. Bruel, let's just move that back. So that's our support zone there, and we need to go for this to then move up. We've moved up today, as you can see. We need to break over here. This is the green line here, the middle of the Bollinger Bands is the 20-day moving average. We've moved up and then sort of compressed. But look at the if I zoom that in, look at the pinching action that's going on the Bollinger. Oh, that's horrible, isn't it? Let's zoom out a bit. I can't know. But it's a bit messy, but you can see how volatile this pair can be. See the pinches on the Bollinger Bands as the upper line comes down and the lower Bollinger Band comes in. That's looking for expansion. That's what we had there. We then rallied up, then we moved back down. There's all sorts of pinch. There's a pinch point there as we move down. Pinch point there, we rallied up. Pinch point here, we rallied up. And now we've got there's not a pinch point as such. We've got a smoother low down into this support zone here at 196.80 to 196.30, that 50 pip. But we need to break over this descending trend line now. So for me, we need to break really going forward around 197 or 198 is really the horizontal resistance, basically where we are. Right now, I would say 197.12 that is, but 198, I should say, sorry, to the upside and this 50 pip zone. So that's our daily sort of areas we're looking at. If we go to the weekly, let's zoom that up. The weekly remains bid, my friend, quite strongly. We've got big support on the weekly time frame for pound Kiwi down here. That's the 20-day moving average. Let's zoom that up for you. That's the 20-day or the 20-week moving average and the 200-week moving average. So a huge support zone there. And that's still bid on a weekly. Okay. The other one was the Aussie, wasn't it? The Aussie pound. So let's do that. Do the same thing. It'll be probably similar. The daily, the daily is bid. The daily remains bid 186. We're over the 20-hour moving average. So that's even more significant. So it's rallied up and dipped, rallied up and dipped. That was nothing to really worry about, to be honest, Bruel, unless you've been caught with that volatility on the 7th of June, the 6th of July. But that's, it continues to be bid. See how that on an end of day basis, that 20-day moving average is held since the bit of volatility earlier. That break there. So we've been over the 20-day moving average on an end of day basis since the 29th of June. So another one, that's bid still, Bruel, and the weekly will be even better to the upside. Yes, indeed it is. It's over the 20-week moving average. And again, a bit like the Kiwi, we've got the 20-week and the 200-week sort of coalescing. And for this pair happens to be at 181.98. So I'd call that 182, wouldn't you? So 182 is the key support on a weekly basis for pound Aussie. And it's bid to the upside. It needs to break over 180. What's that? 86.90 to 187 is the key target on a weekly basis for Aussie against the sterling against the Australian dollar. I hope that's answered your question then. Because I've spent perhaps so long time on that, it's all gone. That was Bruel. Right, Facebook, you've probably all disappeared from Facebook now, haven't you? Thabo, what is gold direction on H1? Thank you. Well, H1, as we said earlier, gold is bid on the daily time frame. This is the daily time frame. The 1 hour couldn't get to the key resistance. This 1832 is a higher time frame resistance. It's a daily and the 4 hour resistance level. So quite understandably, you've got a bit of a not spinning tops, but you've got some short-term opportunities or shorting opportunities on the lower time frame. It first came up on the 1 hour time frame there at about 11 o'clock. It would have been a bit of a risky one, but certainly couldn't get over that 1832. We closed all the way down there. You might have been stopped out. Depends where you put your stop loss. Actually, you probably haven't, because your stop loss should have been above the key resistance at 181. Dear me, 118.32, and you could have been, in fact, put it at the top of that particular hour. So you're still short on that one. This particular strategy wouldn't have taken you short until a few hours later at 2 o'clock, and it's still short, moving down. Support is 1821.76. And the bottom of the Bollinger Band at 1820.35. So the 1 hour Thabo remains sort of weakly short, if you see that what you see what that means. We're waiting for this big candle to break out, but it remains short. Amira, good morning. Hope you're well. Hope things are safe in the Caribbean. Said, my friend, Bilal, hello. I've not seen you for a while. Hope things are all well in the hospital and you're staying well. Said saying here, higher highs if it starts, let's say, on 10 minutes. Monitor it until it. I don't know who you're talking to, Said. I don't know if you're talking to me or others that are here, but Said's a really good guy. Anybody who's got Said on Facebook or Twitter or Instagram, he talks a lot of sense. He's just I can't share your comments here, but higher highs if it starts, let's say, on the 10-minute chart, monitor it till it gets obvious on the 30-minute chart. Then onto the 1 hour chart for those big momentum swing trades. So every trade starts off with that scalp to begin with. There we go. So it's all about multiple time frames. It's all about seeing this. Remember, when you're looking at multiple time frames, the higher the time frame, the more the significant the support and the resistance levels, which is what we've exactly got here on this 1 hour on this gold chart here. This big thick yellow line here is both the 4 hour resistance and the time frame above that, the daily resistance as well. Why do we say that? Well, if we go to the daily chart, we can see that during June, we went all the way down. We trended lower. So technically, we went all the way from over here at 1950, all the way down to 1750. That's a huge trending move lower. And now we've bounced up in July. No, we knew that. We didn't know that was going to happen. On an end of day basis, the gold trader using this strategy wouldn't have gone long until the 7th of July, but he's been long ever since, expecting or hoping potentially this 200 day, he might have got out because the 200 day moving average didn't break for 1, 2, 3, 4 days. And then yesterday we burst through it, but we also burst through the next key level, which is at 1821, which is today's support, but we couldn't get over the next daily resistance, which is 1832, which is where we are now. So he's been long. So it's all about the lower time frames, the quicker time frames reacting to the more quickly, obviously, than the higher time frames. So the daily is still long, but you've been long for a few days now, and had a nice day yesterday. The 1 hour traders on gold, for instance, are now using this daily and 4 hour resistance to trade away from. So what's happened here? We've ran to it this morning at 11 o'clock. We couldn't break it, couldn't close over it. 12 o'clock, 1 o'clock, tested it again, but couldn't break from it. And then by 2 o'clock, we'd rejected that key resistance and moved lower. And that's triggered a short trade in the 1 hour time frames at 2 o'clock. And now we've gone lower, but we can't go under the 1821.90, which is that other level we had on the high time frame. So there we go. Yeah, it's worth those few dollars there. That's $3, $5 on the gold is many pips, so hundreds of pips. So it's certainly worth bagging in the bank. So Saeed, thank you very much. There's no more. Let me just refresh this as well. See if there's any more questions on Facebook. No, there isn't, because I didn't answer them. But Saeed, take care, my friend. I hope you and your son are well and staying safe. Let's just go back to our friends on YouTube. Bassett's asking about the Turkish lira against the Swiss franc. Well, it's funny, I was looking at the Turkish lira earlier on today against the dollar, not against the Swiss franc. I don't know if I've got it here, to be honest. I don't think I can show you it, Bassett, my friend. But it's come back to life a wee bit over this week. It's been obviously at record lows, the Turkish lira. But for various reasons, why not a new chart? I don't think I've got it here on this platform, Bassett, my friend. If you want it, leave your email address. I don't want to share your email address with everybody. But if you recline, I'll find you, Bassett. If you're not, join us, because I'm not sure I'll be able to. Oh, hang on a minute. I might be able to find it here. Euro, no, I don't think it's here. Hang on a second, just bear with me. Turkish Swiss franc, I'm pretty sure I won't have it here. Dollar ruble, dollar, Swiss yen. No, I don't think I've got that cross here, Bassett. Obviously, when you're trading a pair like that, Bassett, just be careful that obviously the spreads will be quite significant. But obviously, Swiss francs are a currency of safe haven. There's been a lot of pressure on the Turkish lira, obviously over the months. I'm sure you're aware of that. But we do seem to have come to life a wee bit in the last week or so. Let me just let me show you the dollar. It's obviously not the same currency pair you're asking about. If we show, did I have the dollar? Where's the dollar? Dollar ruble. I thought I'd seen it here. There it is. There we are. So you see my point when I'm saying that it's all come back to life a wee bit. If we zoom up, put the zoom play on. Just do this just before the markets open. Oh, this is good a chart as any. I haven't shown a Heikin-Ashi chart for a while. This is an Heikin-Ashi chart. So white is positive, red is negative. So last week, in fact, if I could actually take this at the week, you can see we've been all the way up here this year at all-time highs, all-time weakness for the Turkish lira, and even last week the weekly candle was still white on this Heikin-Ashi chart, and we're just turning red this week. So it's had a good few days. The lira against the US dollar, but it's more to do with dollar weakness than the lira coming back, but remains relatively weak. So that's trending down. But I say your particular cross I can't actually bring up here, Bassett, so please excuse me for that. So let's just have a quick recap of what's going on. We've got the second day of the testimony of the chair of the Federal Reserve, Mr. Jay Powell, about to kick off. We've got Sterling. Actually, we've got interesting. We've got forgot that was coming up. We've got the Consumer Board leading index for the UK. Actually, I wonder if this has helped the US, the sterling today. No, it has. It's not come through yet. But yeah, Chair Powell. It tends to be less volatile. Actually, let's get this. Let's go back to dollar index. Tends to be less volatile on the second day of the testimony. What can happen though is that on the second day in particular, he gets questions from not less favourable senators, but the less senior senators, shall I say that? So they can be a bit more pokey, but we'll see what happens. So dollar is still holding relatively well. Dollar index is back to 92.50 from 92.56. Markets are opening at the moment. Crude is down 1.5%. We saw that earlier, crude oil. And government yields 131.73 on the 10-year Treasury, and dollar euro down 0.2 of 1% for the day. at 118.13. And as I say, we've had a good run for dollar index today, maybe cooling here at the top of the Bollinger Band, but still bid to the upside. So if there's no more questions, ladies and gentlemen, I will call it a day. I haven't got trading view here, Basit, on this particular station, I'm afraid. But I'll look it up, see if I can find you. Watch out, guys. It's Mr. Powell live in a minute. So see if there's any contentious questions. The statement was broke yesterday, 3 hours before the testimony yesterday here at 1500 hours. That's why I had this big dip down, more dovishness really from the head of the Fed. Not that was a particular surprise, but it was this hawkish tilt we'd seen from the Fed in the minutes in the month of July wasn't followed through on his testimony yesterday. So what else have I missed today? As I say, the Morgan Stanley report before the markets opened earlier, and very good. They beat on both earnings per share and on the revenue. Only one of the other big banks, I think it was Wells Fargo, which is normally the weakest of the six when it comes to the numbers, actually beat on earnings and revenue as well. So they've all reported all relative good, strong numbers, perhaps not as strong as some were expecting. A bit of a miss for fixed income trading for all of them, but that's not a surprise. Fixed income trading, treasury trading. But interestingly, when they had that big sell-off in the bank markets last week, the Wells Fargo went down over 2%. The others were losing over 1.5% on the day. Morgan Stanley, who reported today, came in 0.5% higher, and the market itself, the S&P only fell 0.35 of 1%, whereas the big banks had lost, to say, 1.5% to 2%. Morgan Stanley booked that trend, so their numbers today are not a surprise. Beat on both earnings per share and revenue, so good numbers for them there. So. There's no more comments. Let me just double check finally. Joel's just got here and he's just asking about gold. So let's just finish with gold for Joel. Joel, it's bid on the daily time frame. Let's get rid of me. Let's find gold. It's bid on the daily time frame quite significantly. But these are the levels you want to be watching, Joel. 1832, the 4-hour and the daily resistance. This is the 1-hour time frame for gold. Moved down lower here, but it's a weak move lower because you're against the higher time frame trend. The 4-hour remains bid here. There we go. 4 hours still up. Found resistance at 1832. Next support 1821, 80, and the 200 period moving average and the 38.2 Fibonacci level from the daily time frame. So it's a key resistance down for 4-hour traders. Sits around there at that 14, 13, 14, 15 zone for 4-hour traders. The daily trader is long. He had his breakout day yesterday because it went over the 1805, which we, on a daily basis, we hadn't been able to break for 1, 2, 3, 4, 5, 6 days. Looked like that resistance, that 200-day moving average resistance was holding, and then bang, we broke through it yesterday on the dovish comments, or the interpretative dovish comments from Chair Powell, and we had a big move in the gold market. So gold remains bid on the daily time frame, 1832 resistance, 1821 support today, and then 1805 is the daily support. So depending on your time frame, Joel was on Facebook, wasn't he? There you go. So I am going to go now because I'm running out of steam. I've been here over an hour and my voice is going. So take care, everyone. Trade safely. Always manage your risk, as I say all the time. Where am I? I'm here. Always manage your risk. And we'll see you again sometime. All the best, everyone. Bye-bye.